Tax Clips, a short 2 to 3 minute summary of some new updates. Today is April 16th. April 15th has just passed, and excited that we're done with our very big deadline. Here is a few reflections of things that we've learned and taken away. This year, MPFA, for any of you in Hong Kong who have an MPF account, obviously use the MPFA to download the appropriate statements. Also, make sure that you gather all the necessary information, because it seems that this year certain types of tax documents are a little bit later this year, such as K1s. Certain investment account portfolio statements are a bit later. Getting some bank account statements, especially foreign accounts, have taken some time as well, so make sure to get those together. Some other reflections are we noticed that not many taxpayers are claiming what's called Trump accounts. I think partially because not many of our clients have been having children during 2025, which is the primary driver to create these Trump accounts. So notice that not much changes on that end as well. Beyond the tax deadline, so here are some few maybe planning and things to consider. Obviously, now that we've bought a little bit of time, many clients we've put on extension. Some taxpayers have an automatic 2-month extension while living in Hong Kong. So now is really a time that if you finish your taxes, start planning, reviewing a tax return to review and determine what can be done for the current year. Are there strategies in 2026 that can be utilized? For example, when do you recognize your income? Are there deductions that should be claimed in 2026 rather than 2027? Should you be making certain types of rollovers to, for example, Roth conversion? And I would say that this is really dependent on an individual situation, because some taxpayers who might be in a very high income right now, it may not make sense to do a Roth conversion right now. Whereas if taxpayers are in a lower tax bracket now and foresee that they could be in a higher tax bracket at some future date, that could make a lot of sense. But also it could make a lot of sense that if taxpayers are in a maybe 24% tax bracket, but they anticipate that their investment account may experience extraordinary gains and they want to basically pay a tax now instead of later, then in that situation, they could consider doing the Roth conversion as well. So some other things to note is start planning if you need to make quarterly estimated tax payments. These should be made quarterly, April 15th, June 15th, September 15th, and also on January 15th of the following year. So many taxpayers, especially those in Hong Kong, do not have tax withholding on their paychecks. So they obviously, if they owe tax, should be paying quarterly. Whereas if a taxpayer is in the US and they have a W-2 or a US employer who's already withholding the federal and potentially state taxes, they might not need to pay additional taxes through quarterly payments. So something else to manage, especially for managing cash flow. Also, we are very grateful and thank you for our team for working very, very hard through this first couple of months of the year, and realize that this year has been a bit more challenging because Chinese New Year was a little bit later in this year, and Easter seemed to be a little earlier this year. So that really compressed our tax season. But fortunately, so some of the work we've been pushed out. We advise many of our clients who owe taxes to pay those taxes before April 15th, because IRS still will charge interest and potentially late payment penalties if those taxes are not paid before the appropriate deadline. So thanks again for this tax tips, and see you again for the next one. My name is Christopher Chang.